All right, so we are recording. So this next week is going to be a huge earnings week. We have earnings from some huge companies: Microsoft, Procter and Gamble, Merck, McDonald's. Everybody knows McDonald's, but I mean it's too many companies to call out. But the big ones are going to be really moving the market. I expect Microsoft's going to have a good earnings. It'd be a huge surprise if they didn't. If they don't have a good earnings, boy, that could really move the market. Meta, I'm expecting they're going to have a decent earnings. I want to think that they're going to have a good earnings. I don't see why they wouldn't. And then Apple, that's a wild card for me. I have no idea if they're going to grow their subscribers and the people buying iPhones. I think that market's pretty mature for them, and they have pretty good competition from other players in the smartphone market. But we'll see what Apple comes out with. They haven't been growing, so we'll see what they have to say. And then Amazon is an incredible company, and I expect they're going to have a good earnings. So and then Friday we have energy, right? Exxon and Chevron on Friday. I expect they're going to have good earnings because oil prices have been at a good level. Maybe they might start announcing they're going to go into power generation because that seems to be a pretty hot area. So this week, I mean, this is like a pretty intense week. You're going to see a lot of news and a lot of important news on these companies, and it's going to set the table, I think, for the rest of the earnings season, where what's going to be the mentality of investors and what's going to be the sentiment. Is the market going to continue to go down because it had a down week last week? Is it going to stay flat, or is it going to actually rally? We'll see. In some sectors, there's a lot of enthusiasm already priced into the stock. So if the earnings come out less than enthusiastic, the market can really move down. We'll see. We'll see what happens in those respects. But I'll be really looking at the market every day and seeing what news is out there. So as we look at the remainder of 2024, I always try to think, what sectors, and before I move there, let me see if the poll is getting any votes. Nope, no worries. Okay, I'll just go with the topics that I thought I could begin with. At any point, you could suggest a topic we could talk about, stocks you want to talk about. Just let me know. And Kiter, did you have a comment? Okay, cool. So before we move into sectors, I wanted to go into something that I think when I read Peter Lynch's book, and that was a long time ago, by the way, I read Peter Lynch's book, Went Up on Wall Street, like 30 years ago. And who's Peter Lynch? Peter Lynch was a really successful hedge fund man. You would call him a fund manager by today's standards or the historical standards. And he really dominated an era in the late 80s where he was the number one fund manager. So he did really well. And what's interesting is that Peter Lynch did not have a finance background. He came from other disciplines and then thought he could do fund management. He worked at Fidelity and they gave him a shot, and he was a really good success. Part of his recipe for success was, going into places where you have advantages just because of who you are. Like, you may be interested in certain industries just because you're interested in them. You just think it's really interesting and you get into them. Or you may have been employed somewhere and it gives you an advantage because, hey, like in my case, I've worked in software development companies. I've worked predominantly in software and technology and selling infrastructure for technology. I've worked at a pharmaceutical device company. I've worked at an oil company. I've worked at a company that manufactured industrial pumps. And those experiences and the experiences that you have give you a knowledge advantage in certain industries. So if you worked at an industry, hey, I understand that industry better than most investors. So I have a knowledge advantage in that industry. I encourage you to think about that and always be aware, where do you have a knowledge advantage? And that's kind of following something that I heard from Peter Lynch way back when. And I've always tried to kind of understand, okay, where do I have an advantage? And my advantages are with software companies, to some extent technology companies, because I've worked in that space for 20 plus years. I worked at a pharmaceutical company, so I understand pharmaceutical, the FDA process, how they manufacture, how quality is super important, obviously, because people are taking your drug and you don't want them to get sick or worse. I understand oil companies. That was my first job out of college, and I really enjoyed that experience. It taught me the oil business, which was fun. And I try to use those advantages. I also have personal interests in certain areas that come into play. So that's one thing that I would say, try to understand that as an investor, because investing is not a set it and forget it, process. It's almost like gardening, where, you can have a really nice garden today. You've worked on it for a long time, but if you don't tend to it, if you don't water it, provide the nutrients and the fertilizers, trim, kind of put the right plants in the right places, your garden's probably going to start looking worse, or not as good as it looks today. More importantly, some plants may die off. Some plants may overgrow, and your garden a year from now, or worse yet, in 2 years, it's going to look terrible. Only a few plants survived. A portfolio is similar to that. The economy continues to kind of evolve and change. The economy that we had in 2019 was completely different than the economy we faced in 2020, because we were slammed with COVID. So then the economy immediately changed. So back to that garden scenario is, you have to realize, okay, things have changed. I have to change my portfolio so that I have the best performance going forward. And that's why I wanted to kind of have a conversation around sectors and how I look at sectors, not every day. I would say maybe once a quarter, and see, okay, which sectors look like they are probably going to do well in 3 to 12 months. Where is the market moving towards? Right now, we're seeing a big move from investors selling out of technology and large caps and rotating into smaller caps in other industries and other sectors. So could I get into those sectors, put some money there, and then see my investment go up? That's the intent of looking at sectors. So first, understand what your advantages are from a knowledge perspective. And now let's look at sectors. So sectors are pretty much, when you look at the whole economy, you have thousands of companies, and they are all pretty much kind of, it's a big, large pizza, and you slice it up. We'll start with technology. That's the Apple, that's NVIDIA. These are companies that create technology products and also do services. Communication services are like Alphabet, Google, Comcast, Disney, AT&T. Utilities are pretty easy to understand. The electricity that comes into our homes, gas that we burn in our stoves. Real estate is commercial real estate, all kinds of different real estate products. Energy, oil companies, as well as natural gas. Materials, they go out and they mine for materials, and then they put those materials into use as a commodity. Industrials is kind of a collage of different companies that make industrial products. For example, 3M is a classic industrial company. They create all these industrial products, as well as companies that make products, machines, products that go into industry. Consumer discretionary is a broad sector. You have Nike in there selling sneakers. You have apparel companies. You have cosmetic companies. You have companies like Airbnb is consumer discretionary travel. You have the e-commerce companies are put into that because they're classified as a retailer because the market doesn't know where else to put them. So Amazon's in there. Consumer staples are the things that we eat, drink, consume on a regular basis, right? So those are the items that are food products, things that no matter where the economy's at, we're going to have to eat. We're going to have to shampoo our hair. We're going to have to tend to our homes and our cars. Those are staple products that will always be in demand. Healthcare, pharmaceuticals, healthcare payers like insurance companies, hospitals, and so forth. And then financials, banks, brokerages, people that lend and work with money to help the economy. So that's kind of a broad brush of all the different sectors that are out there. Now, at any one time, sectors are going to be performing differently. And here I'm showing all the 11 sectors that I just went over, and you have I have them ranked by the performance for the past month. And and while I do this, feel free to raise your hand if you have a question, or just feel free to interrupt me at any time if you have a question or a comment. Would love to hear that, and I'll try to keep an eye on the chat as well. So getting back to, and let me look at the chat really quick. So, and Kidder said, I love this book, Went Up on Wall Street. He said his stocks made the gains in year 3 and after. Yeah, long-term holding the stocks. I think what Peter Lynch did really well is he really understood businesses, and he bought into those businesses, really believing in the company and their products, and really saw them through. And he killed it. He would find companies that were somewhat obscure, but ended up being huge successes. Fair guy, I'm really confused about how semiconductor manufacturing stocks are going to look like through 2025. Micron, Intel, design companies like AMAT, etc. These stocks haven't gone up as much as NVIDIA. That's a very good question there. I'm going to save that one toward the latter part of the call. I'm going to keep my stream of thought, but that's a very good question. I appreciate it. So I'll get back to that one. All right. So let's talk about, so we're into sectors, and you look at technology, right? Technology's just been doing great, and it's done over the last 5 years, 534%, right? So just a great return. But as we kind of get closer, kind of bring that time fence closer, you see that over the last month, it's actually had a pullback, especially in semiconductor, and especially in certain spots that were probably overpriced. So that's interesting. And then communication services, we've had a pullback in companies like Alphabet. Alphabet had a pretty good pullback this past week. I think it was down maybe 8% over the course of the week. Meta had a down week. I mean, there's some big companies in there that had a down week. And you can see the size of these market caps of the sectors, technology being the biggest because it's so inflated. And then second biggest would be healthcare, consumer discretionary, and then consumer services. So now what I'm going to focus on is on the other part, which is, okay, there's some sectors that are beginning to really work. Real estate with lower interest rates, that makes sense. But I don't like the 5-year return. You see how real estate is really based on paying high dividends, which is interesting to a lot of income investors. And that is interesting for some, but not ideally for me. I don't think I need any more real estate companies. I'm not excited about them. Financials have done really well. Year to date, they've done well. Over the 1 year, they've done well. But you can see that they're not a long-term value generator. Financials tend to go up and down, up and down. And Kiter, you have a question? Go for it.
I have a question, yes, about the financials. I mean, financials, like every other sector, have sub-sectors. And one of the things that I think that I noticed that you are not talking too much about is on the data providers, not the banks themselves or the insurances, rather than companies like SPGI, S&P Global, or MSCI, the indexes and the analytics that they are selling around it. FDS, FactSet, what else? CME. like that they are providing the brokerage platform for options, and so on. I mean, I can continue and list you, but I mean, yeah, I'm interested to hear your thoughts about that, if you have, of course, because as I said, as far as I noticed, I didn't hear you talking too much about this subsector. You know what I
Sure.
mean?
Yeah, that's a good question. And if I could just confirm, I understand your question is, so traditionally, right, financials, we think of banks and we think of the obvious financial type companies, but you're talking about more of the brokerages and data providers like CME Group that does commodity trading and so forth. How is that performing, and is that an opportunity going forward? Is that kind of like the, the
Yeah,
basis of the
yeah.
question?
This is, yes. CME is a one good example. SPGI, S&P Global. You know, our S&P, that they are actually creating the indexes, and you know, and they are also building analytics services around it. So yeah, about those, because I think that if we will be looking at their charts later or at their free cash flow or revenue, we can see that actually they are going nicely from lower left to upper right, I think.
Yeah.
So those as well. That's what I mean.
Yeah. So so a couple of things there. First, I like where your head's at, which is you're trying to get into like a pocket of opportunity within financials. And is that pocket going to continue to work? That's exactly why I'm talking about this, is get into precision on, types of companies that you think are going to keep working. You make a very good point, which is, okay, the big banks, are they going to go up any higher? I don't think they are going to go up much higher. I own Citibank. I would love for them to go higher, but I don't think they're going to go higher. But companies like CME Group, are they going to keep working because the economy is doing okay? I think the economy grew at 2.8%, which is okay. It's not setting any records, but it's doing okay. Interest rates are about to come down. And as interest rates come down, there's just going to be a lot of finance activity. So I like that thought. Um, I would say that the closest I can come just off the cuff is that I am invested in Robinhood. I really like Robinhood. I think they're kind of working within their own little space of the finance ecosystem. I like other companies like Allstate that work in insurance, which is part of financials. But let me carry on, and then let's dive deeper into financials, maybe in about 15 minutes. I wanted to keep my stream of thought, and then we're going to come back and dissect this and come back to your question, all right, and Kiter. But I
Yeah.
like where your head's at. That's the kind of thinking that I'm promoting here, is think about where is there opportunity within these sectors and these industries. So we were on financials. Now, industrials had a good week. They had a decent month. They're up 5%. Historically, they've been a good performing sector and industry. I should say sector. And utilities, I've never liked utilities because of this 5-year return of 15%. It's just terrible. They just pay dividends, and that's good for some investors, but not for me. And Kidder, can you mute? Let me see if I can mute you. Got a little background noise coming there. Okay. So healthcare. Now, healthcare has historically performed well, 155%, but I've seen kind of I would say, depressed stock prices in healthcare. So that might be an opportunity. Although I've been saying that for a year and a half, it's beginning to work. Will it continue to work? I think it will, because historically it should, and we'll see if it does. And then materials. So the top performing sectors for the month are listed here, the worst performing here. And what I'm going to do is I'm going to keep track of this, because right now it's potentially the beginning of a trend, and I want to see if the trend continues. Now, I'm going to dive deep into industrial. Fair guy, look at the company. Okay, so you have UTHR Absolutely. UTHR is an stock that I own. We can look at it closely, and it's part of healthcare, and it's a biotech company, really exciting company. Looking at industrials, industrials are made up of all these industries. And within, you can see that, I mean, there's a lot of industries. You can't be an expert on all of them and you can't track all of them. So what I'm trying to do is I'm trying to get to maybe a few that are interesting to look at. And all the industries that fall into the industrial sector are listed here. I've, again, looking at the performance for the last month, it looks like metal fabrication is number one. And it's pretty interesting how fast it's gone up. I'd like to see which companies exist there. And then there's other businesses like distribution, rental and leasing services. I think it had a really good month. Probably a big part of like the lower interest rate is probably going to rally real estate based companies and companies that lease out products or service or big machines and so forth. So you can see all the different types of industries that belong in this particular sector. So looking within, I think I'm looking at here, I'm looking at metal fabrication, which was the top one. Now I'm getting into companies, and I sorted this by the lowest price to earnings ratio. We got CompuSecure, InSteel Industries, and these are small caps under $1 billion in size. And then Fair Guy looks at CAT. You know, CAT is an interesting company. We should look at it, and that's within industrials. Let's see where it lands. But you can see here now I'm into what I think is maybe a couple companies that I could start really drilling into. So we started at the sectors. You know, which sectors do we think could perform late 2024? Within that sector, we looked at the industries, and within the industries, we saw that this industry looks really interesting. It's really done well for the last month. Now I'm looking at companies. So let's take a look at a couple of these. We're going to go InSteel Industries. We'll look at that one closely. And I'm looking at year-to-date change is negative, but that might be, there may be some pent-up upside there. The PE is really low. And then let's look at Worthington Industries and see if I can find, these are all, a lot of these are really small caps, but here's Carpenter Technology. Wow, they're having a nice year, up 98%. ATI. Wanted to look at one that's a little bit bigger, and I think Worthington's a little bit bigger. And then I'm going to go with the suggestion, which was CAT. So we'll look at CAT. All right, let's start with CAT. I believe it's an industrials, farm equipment, and machinery. Okay, so first, from a business perspective, you know, is Caterpillar going to do well going forward? They depend on a couple big trends. One, construction. Is construction going to be healthy and it's going to grow and so forth? And I think with lower interest rates, especially if Trump wins the election, he made most of his money or most of his activity has been in real estate. So he'll be a big, like, hey, let's build infrastructure. Let's build. So that would be a positive for Caterpillar. The other area that Caterpillar operates in is in farming equipment and things of that type, mining and things of that type. So I think that is going to be a reasonably good kind of economy. I can't say that it's going to be booming like, you know, technology's been booming, but I think it's going to be decent. When we look at this stock over the past year, it's up 35% over the last 5 years, a really nice up and to the right chart. So it's been doing well. The company has many analysts, I'm sure, covering it, and it's saying it's priced a little high right now. So that's interesting. Market cap's 171, so it's a pretty large cap. This stock here, I would probably think it's a good idea to wait for it to get to a low point. Like it was trading at $226 per share. Is there going to be a low point at, and it's had some really nice pullbacks. Right now, I don't know that it's in a pullback. So I'd probably want to know that I'm buying in a nice pullback and kind of setting myself up to have a nice appreciation. This is a good, healthy company. I think most investors know Caterpillar, are very comfortable investing in that company. And if we look at just a quick cash flow and back of the napkin kind of valuation, they produce really nice cash flow, 10 billion in cash flow. So if I multiply that times 20, I get to about $200 billion in value. So I'm right around what their current market cap is. So if this one here, the play would be wait for a solid pullback, buy at the right time, and then you'd have a very good quality company that would probably appreciate over time because it's certainly done that. There's demand for their products, constantly as the world needs the resources that it needs to mine, as it needs to build additional infrastructure. Bridges are collapsing and, you have to rebuild them. So you need Caterpillar equipment to do that. Roads have to be repaved and so forth. So the company looks like a good company to keep an eye on, and definitely one of the players within the industrial sector. It looks like their PE looks good, but not, it's not like a high growth company. It's just going to be a good, stable company. Okay. Now this one here would be in my kind of universe, or how I think about Caterpillar is going to have a decent return. It's not going to break any records. And I think we got 2 hand raises. Go for it, guys. Let's start with N. Kiter. Did you have a
No, sorry, I did not.
Oh, okay. And then no problem. Scott, did you have a question?
I lower my hey. Yeah, I just want to share something really random about Cat. So it's a pretty famous company. Do you see this?
Yeah.
I bought this here. I'm in Switzerland, by the way. So world famous company. Anyway.
I've noticed they also have footwear. I've noticed in stores they sell Caterpillar like boots and Caterpillar footwear. And I don't think it's meant to be like you go to work with them. I think it's meant because the brand, I think, is got some appeal to people. So I understand that. Very cool. All right. So let's take a look at some of the smaller, industrial companies we looked at. Worthington Industries. So this company operates as an industrial manufacturing company. It operates 3 segments: building products, consumer products, sustainable energy. Okay, interesting. Over the last 5 years, it's been up and to the right, but you see this pullback. Like on the previous company, Caterpillar, I usually look for nice pullbacks like this to a good quality company. So that pullback may be interesting. And if we look at the 1 year, that pullback was pretty healthy. It had a nice bump in the last month. Interesting. Okay, cool. $2.5 billion company, so it's about a small cap. It's got a PE currently of 9, and it's set to be 15 going forward. Decent dividend, and analysts say it's a sell, but let's see what we think. So Worthington Industries, if we look at their cash flow, they're going to cash flow. So free cash flow, $206 million. Am I looking at I'm looking at the annual. And their cash flow hasn't been very consistent. That is kind of like a concern to me. Is I like seeing consistent cash flow. They had good cash flow in 2020, 2019. Then they kind of had a little bit of a recession in 22, but now they've picked up their cash flow. If I take their cash flow there, and let's see if they're growing their top line revenue. So the revenue has been contracting, and that's a massive contraction from 23 to 24. I wonder what happened there. There's something going on here that has to be explained. Is how can you have such a big contraction? This one here would have to be a lot more homework because the information, kind of like the consistency of the business, is not there. So this one here would not be a company I would want to invest in. I'd have to investigate it even further. So let's move on to the next one. Hopefully we find something that's interesting in Insteel Industries. So Insteel Industries is a small cap, okay? And you're paying almost 1 times revenue for the company. Their PE is really high this year, but going forward, it's supposed to really come down. So as we look at this company, this guy with its together with its subsidiaries, manufactures and markets steel wire reinforcing products for concrete construction applications. The company offers pre-stressed concrete strand. Okay. So as construction with concrete occurs, like bridges and structures and so forth, their product becomes needed. So as we look at their revenue, you can see that they were doing well for some time, and then they've had a pullback in their business, which isn't a showstopper for me. I want to pick up on a trend and see that, okay, the quarters have been tough, but are the tough quarters behind them? You can see that their revenue is beginning to change. You know, their decrease is slowing down. So this might be an example of a company you can pick it up at the right time and then watch maybe a year or 2-year trend really take this stock up. If we look at the stock price of the company, it's really come down from its high in 22. It was at around $44 a share, and it's come down to 34. So this company doesn't excite me because I'd like to see a stock where I could potentially go up 50% or maybe higher. And I'm not sure I'm going to get there with this stock. So I'd probably keep looking. Looking at their free cash flow. They cash flow fairly well. In 23, they were at 100 million. And then trailing 12 months, 59 million. They probably show a decent discount, like 20, 30, 40%. But I don't know if this stock is going to move overly quickly. I'd have to keep looking. The stocks that I own in industrials, let's see if I can get it. So that I own a couple of industrials. I own Zim, which is ocean freight. I'm still buying into Zim. Uber, which is classified as an industrial, and I'm buying into Uber. And I think I've got this sorted incorrectly. There we go. So 3M, which is definitely one of the big industrials. I'm shorting Vertev, which is electronic equipment, and I'm doing well with that. I'm up 11% on my short position. And Zim is a ocean freight company. I think they could really do well. They've done well already. I'm up 41%. At one point, I was up 100% like a month ago. But I think shipping rates have really been higher than expected, and that was really benefiting Zim. Uber is classified as an industrial, but it seems like it's a mismatch to the industry, but that's where they're tagged. And Uber is one of my big stocks that I continue to buy shares in. But kind of like the conversation for today is, that's kind of a stream of thought that I take to try to find, the next wave of value in stocks. And as you can see, it takes, it's not a perfect science. It's an art. You kind of go through a thought stream to try to find a good company. I think N. Kiter brought up financials earlier. So let me focus on financials and see if we can get to one of the industries that he thought, hey, we can probably dig a little deeper. And Kiter, I don't know if you can come off mute, but maybe we can kind of talk through this together. Here's financials. And within financials, you have all these industries. And you're right, they're all kinds of different. You have the classic banks, insurance companies. I think you were going into here, which is financial data and stock exchanges. Any other industries that you think we ought to look at?
No, yeah, that's a good selection. The financial data and stock exchanges. Yeah, that's what I was mainly referring to. Yes.
So stay with me. So now we dug a little deeper, financial data and exchanges. So let's look at, if we look at the year-to-date change, let me sort on that. And actually, before I go there, so financial data and exchanges, over the 1 month, it's up 8.82%. Very good. Year-to-date, it's only up 11.73. So I see opportunity because, hey, we saw a very good month, but it hasn't been rallying for that long. Has the rally just started in this particular industry? For the 1 year, it's done well. But is there more left in this particular industry? So as we look at the companies within this industry, Coinbase is in there, by the way. I own Coinbase. I own Robinhood, which might be in here. CME Group is in here. Very good. So what I'm going to do is I'm going to sort on forward PE and see which had the lowest forward PE. Let me see. Let me look at just the PE ratio. Okay. And okay, so the lowest PE company is CME Group. So let's take a look at that. Value line. I'm not familiar with that one. Market wise. So Nkiter, which other company should we look at? We have Value Line, CBOE, Market Wise, FactSet, Intercontinental Exchange, NASDAQ.
Now, honestly, I created myself a basket, which is mainly CME, FDS, which is not working too well so far, and you can see it been hammered after the report and waiting for recovery. SPGI and MSCI, these are my favorites. And CBOE, yes, CBOE is something that I jumped into like 2 or 3 weeks ago. It had a pullback, and I'm happy since it came up since then.
Cool. Okay, I'm going to start with CME Group. And CME Group and its subsidiaries operates and markets trading of futures and options. And this is a lot around commodities. So as investors are buying commodities like wheat, pork bellies, steel, iron ore, those types of things, that's what we're talking about. And it's kind of a stock market for commodities. Now, this company over the last 5 years, you've seen that it really rose and then it really came down. It's almost with the pullback of 2022 pulled this one back. It has had a pretty good rise probably in the last year. It's pretty flat. So let's take a look at this. This might be a decent opportunity because you've had a recent pullback starting in March 4th to now. It's down quite a bit. I like looking at this charting from our friends at Google, because what I could do with Google is I could go here to here. It had a 12.5% pullback and overall about a 9% pullback from March. So that's cool. All right. So I like that, hey, I'm not going to be overpaying for this. This is a well-known company, $72 billion market cap. It's a $5.6 billion company. It probably has a very good margin rate, pays a decent dividend. Current PE is 22. Analysts say it's a hold and it's discounted slightly. If we look at their revenue, I'm going to look at the annual, and their revenue has been increasing, which is very good, consistent growth. Now, they had a down year in 21, not sure why, but most of it is green, good green growth, very good. Okay, that looks good. Let's take a look at their free cash flow. So free cash flow for the last full year is $3.3 billion. So this company's fairly priced. If I go 3.3 times 20, I'm going to get to about 66, 70 billion, somewhere around there. They're already priced at 70 billion. So I did that back of the envelope, free cash flow times 20, and I get to 66. I'm going to round up to 70 billion. So this one doesn't have a big discount available. Just kind of at a very broad brush kind of review. The analysts are saying that it is going to have a good, consistent earnings per share, and it looks like it's going to have decent growth on earnings per share. So this one here looks like a solid company. It's a well-known company.
Can you, Victor, I would suggest take a look at the dividends. If you have a dividends history, and you will see something interesting.
Okay. Looking at dividends now. So it looks like they had a big dividend in 2023, like a one-time. I guess they had
So
excess.
every year they are doing one time. That's what nice. That's what I like about them. They
Okay.
are making me a lot of money every year.
Good.
You see,
Yeah.
yeah. Sometime in December timeframe, they are hitting you with a nice dividend.
That's very good to know. So for income investors, I mean, if you're having a nice dividend income and you want stocks that are going to deliver that income, that's a good idea. Yeah. Good thing you pointed that out. Okay, good. So that's CME Group, and they're within financials. Let's take a look at Moody's. So I picked out Moody's because I know Moody's. They're more of a rating agency, so they are more of a services company. So they're an integrated risk assessment, operates two segments. So you oftentimes when you look at a bond and it'll have a Moody's rating, is it AAA? Is it triple B? And that rating influences investors of that particular bond, and it'll influence the rate of return that you'll have on a bond. So these guys are providing that service and providing that type of oversight and review. So they're a market cap of 82 billion, revenue of 6.5 billion, and pay a small dividend. Analysts say it's a buy with almost no discount. So, and really it's sold at a tiny premium. They're growing the trailing 12 months, you see pretty good growth there. Yeah, they're growing nicely in the most recent quarters. Historically, they've grown nicely. They're probably just rating more bonds and more investments and having more revenue as a result. The free cash flow is $2 billion, and they've been growing it. If you measure way back when, they've grown it, so that's good. So at $2 billion, I'm not going to get to an $80 billion valuation. It's just not going to happen. Part of it is that the stock's really done well. It's done really well. People know Moody's. It's a good company. It's a good, consistent company. So this, I'm not sure what this could fit. I mean, an income portfolio, I don't know that it fits because it has a low dividend rate. I think it's really has a high stock price. So I don't know that there's a lot of appreciation left. It's just a good example of a quality company. So that's Moody's. Let me close that guy out. MSCI is.
Oh, I'm sorry, Victor. Which is the other company that does bond ratings? Is it S&P?
So Moody's, and then there's why am I so
SPGI.
So it's Moody's.
SPGI, S&P Global.
Dun and Brett, no, not Dun and Brett, D&B. Yeah, D&B, Moody's, Standard & Poor's. That's it. So
okay, thanks.
Here are the companies that do the ratings: Standard & Poor's, Fitch Group, and Moody's. All right, so let's look at MSCI. MSCI, together with its subsidiaries, provides critical decision support tools and solutions for the investment community. So these guys do more tools and help investors with a tool set. It's almost like software programs and so forth. Okay. They are a lower.
If I can help here.
Yep, please do.
So MSCI, they are creating the indexes. So you have, for example, the MSCI World Index. So every company that creates an ETF or something like that, they are paying them royalties or fees. So that's how they make part of their money, besides of advisory and analytics and stuff. But their main source of income, I think, I mean, don't take me as 100% correct, but they have a serious source of income is their indexes. The same as the S&P Global, SPGI, that, for example, everything like the wool that attached to the S&P, they are paying S&P Global fees for using their index.
Got it. Good to know. Okay. 5 years, the MSCI, the stock hasn't done great the last couple of years. Looks like it's down 2.64% for the past year. Year to date, it's down 3.48. Okay. So is that pullback an opportunity? It did really well this past week or so. Okay. So PE is a little high, current, and then forward P is a little high. They have been growing, which looks good. Really nice growth, more than 10% per year. And looking at free cash flow, the cash flow, see this makes me feel comfortable on cash flow. It goes from 370 million all the way up to 1.3 billion. Really good growth trend. And the revenue looks good. So this is a good, consistent company. We look at 1.3 times 20, maybe a 25 since it's so consistent. It's going to give me a valuation of about, I would say 32 billion, and they're valued at 42 billion. So they're still priced quite high, and I'm not seeing a ton of opportunity in this stock. Okay, so the one that was in here was Coinbase, that is within this industry that we decided to look at. And this one here is a little bit kind of the Peter Lynch playbook, which is understand a business and buy it before other investors like it. And so I started digging into cryptocurrencies a while back. I'm going to say about 7 years ago. And it was kind of a total foreign area for me. But I learned as much as I could. And one thing I didn't learn eventually was that Coinbase is the only publicly traded cryptocurrency exchange. So they're the only one. They're the one that exists. And when you kind of watch my videos, and I'm really married to the idea of I want to find companies in the real desirable zone of these quadrants. The most desirable zone is a company that has no competitors. They have no competitors. They get to keep high margins. They get to operate, without any competitors. And the companies that I don't like is they have too many competitors. Prices are low. Margins don't exist. They're constantly having to defend their business. Where here, they're not defending their own business because nobody's out there competing against them. When we look at Coinbase, they're the only publicly traded cryptocurrency company. The bad news 2 years ago of I think it was SPX or whatever company went bankrupt. That was
SPX, I think.
That was good news for Coinbase. That's one competitor out of the way, and they were not publicly traded. And you know why now? The publicly traded thing really means something to me. Is I buy on Coinbase. I've been buying on Coinbase for 5 years or so, and I do that because they have the most credibility. So if they continue to have that solid credibility, this is the company that is going to benefit from crypto. Crypto does not have to be mainstream. It does not have to be everything to everyone to be super successful. Bitcoin has already achieved what's the market cap of Bitcoin? So Bitcoin has I think the market cap, and I don't know if this is going to tell me the market cap. I don't think it's going to, so let me ask Google.
60 billion.
So 2.5 trillion. So that's the cryptocurrency market cap is 2.5 trillion. And then crypto, Bitcoin has $1.3 trillion of market cap. So when we talk about these cryptocurrencies, they're setting up these really large coins that have huge valuations, and Coinbase is the most credible company providing this to investors. They're also partnering with hedge funds and ETFs and giving them some of the services that they have the know-how to help those ETFs work. So the PE, if you look at a high growth company, is very reasonable. The one thing that you have to kind of muscle through is their data is really up and down. You can see that in 19, there were a total revenue company of 522, and then they went to 12, 78, 31, 29, 37. So their data is not following a smooth chart because of where cryptocurrencies are. So the example I just wanted to show is that the Peter Lynch method of understanding a business, understanding their competitiveness, and then believing in them or not believing in them could really pay off. Coinbase has been my number one from a percentage perspective, my number one performer for the last 2 years. It beat Meta. It beat Meta by a pretty good margin, but I don't have a lot invested in Coinbase because I don't put a lot in crypto. I think there's a question from N. Kiter.
Yeah, Victor, I feel terrible, but I want to challenge you a bit about the coin, because you remember, I think it was yesterday when you were talking about Visa and MasterCard, how they are actually challenged by the crypto and maybe change in customer habits. Now, in the case of Coinbase, like I think that 4 or 5 years ago, I opened an account and I bought like very little. I mean, because it didn't work well. I have like maybe a couple of $1,000 invested in Bitcoin and Ethereum and some other crappy coins that I was kind of bought their stupidity. But and then really maybe the only decent exchange that you could like decently open an account and so on. But now I can buy crypto regardless of the ETF. I mean, leave aside all the new ETFs, but I can buy it in my account in Interactive Brokers, and I can buy it through your other favorite, Robinhood. I even can buy it, I think that through PayPal. So they are not the only game in town right now. That's first.
Yep.
Second, I'm looking at their financials. And let's say, unless you were talking about that, this is a company that I would not give a second look, because you can, I mean, if you look at the stock-based compensation and the dilution, it's outstanding. And it looks like that company that is built just to compensate and make the managers, the founders, and the employees happy. Okay. Now, I'm talking like aggressively because,
No, I'm glad.
Open the conversation. It's not, I'm not seriously against, but you know what I mean.
So to begin with, please continue to ask questions like this. Please continue. If you have a different point of view, meaning if you disagree, please continue, because that serves me and it serves the community. Okay. First, I appreciate like the competition. Let's talk about competition first. I agree with you that crypto, the comfort level of investors, that whole market space is expanding. I agree with you. And it's bringing in competitors. Robinhood's doing a good job, but other brokerages are offering crypto. You can buy crypto through ETFs now. You can buy both BTC, Bitcoin, and you can buy Ethereum. And they expect Solana is going to be put on an ETF as well. All those things I take into account. The piece that I'm hanging my investment on, and FYI, I'm up so much on my coin investment that I could give them enough time to figure this out, is Coinbase is still the most knowledgeable, forward-thinking, pure play crypto exchange in the market. Robinhood does many things. They do stocks, they do online banking, they do all kinds of good stuff. And that's the new brokerage. Then you have companies like Fidelity offering crypto on their exchange. Well, they're traditionally a stock brokerage company. And then you have, so forth and so on. Now, the pure play crypto exchanges out there, I think investors are very careful with those. Now, will Coinbase continue to evolve their business and be part of every phase of crypto? That is, I have to constantly track that, because if they do, they continue to stay in the green. Because let's say the next phase is, and it is happening, ETF money is really changing the cryptocurrency market cap. ETFs are buying coins like crazy. Well, Coinbase has been part of several ETFs where they're providing a lot of, think of the back office processing, the security of those coins and so forth. Well, is that, a big part of their business now, which could be very profitable, where they're offering all these services to other firms, and they become kind of like we just saw the CME group. We just saw these other groups that make money by helping other financial services companies be successful. So you are absolutely right that there's more competition coming into the crypto space. Do I believe that Coinbase is going to stay in the green forever? I don't know. I think right now they're still in the green, but you're right. If a new competitor or a range of competitors begin to take away their advantages, I would probably move them into the gray. So, Scott, did you have a question?
Oh, I just had a quick comment, and sorry, Victor, I don't mean to pile on you here, but just another comment in line with what Enkider just said. So maybe just an interesting point. So I'm with Interactive Brokers UK, and it's just something interesting I noticed. They, as far as I can tell, just started offering crypto trading. And I think that they've been offering in the US. So if I was still in the US, I probably would have had it earlier. But because I'm not in the US anymore, I think that they didn't have that option. But now they're offering it, and they're definitely not a dedicated crypto broker, right? I mean, they're kind of like the professionals broker, if there is one. It's like they offer everything. But like you said, they're not dedicated, and there's definitely going to be more competition in the world. But yeah, the competition is just continuing to grow.
Yeah, I see that, and I actually think it's a net positive for the cryptocurrency industry, right? When mainstream brokerages like Interactive Brokers are now offering probably Bitcoin and Ethereum, and you can buy it through that brokerage. That's great for the cryptocurrency industry, because it's the mainstream players are now realizing their investors, and I believe 65 million Americans own some form of crypto. That's really high. That's pretty incredible. Now, back to like Coinbase and my valuation. Coinbase, like 5 years ago, the questions were, is crypto for real? Is this thing going to be a fad? Is it going to go away? That was the biggest concern in Coinbase, right? Like, is this going to be kind of like the metaverse? Oh, it was supposed to be this big thing and it never happened. Okay, well, that's kind of behind us now. Well, actually, cryptos actually continue to get bigger and bigger and bigger. Now, one of the presidential nominees, Donald Trump, he was like all in on crypto. It's like, holy smokes, man, that guy went all in on Bitcoin. So if he wins office, it's like, holy, what's Bitcoin going to do? Go to $100,000 per coin? I would think it's probably going to do that, because you got a presidential president that's now all in. Now, how does that influence Coinbase? Well, it just makes me feel more comfortable in my investment with Coinbase. If the universe of crypto keeps getting bigger, the opportunities for Coinbase keep getting bigger, and they are the knowledge leader in this space. I don't think many people are going to argue with me with that. I think Interactive Brokers does not have a lot of knowledge in crypto, nowhere near Coinbase. Robinhood probably has a little more knowledge, but they're not specialists like Coinbase. And again, on is going to be, if you're Apple and you want to create your own cryptocurrency, but you want the exchange that really knows their stuff, they're probably going to go to Coinbase, because they're the ones that really know this space backwards and front. they're not going to go to Interactive Brokers. They're not going to go to Robinhood. They're going to go to the one that just does it. So this is a big kind of like more in Coinbase. I depend more on believing in the company, believing in the space, and I did manage my investment. I didn't bet a big bet, and it's really worked out. But I continue to believe they continue to exist in the green quadrant for me. And you guys bring up very good points. But let's see how it evolves. The business is really evolving. The industry is really evolving. And this is part of the financials industry that N. Kiter Dick pointed out.
Yeah, and part of the paperwork that I had to fill out to activate crypto trading, I don't think they're the custodians. I think that Interactive Brokers uses Paxos or one of these other companies for the custodians, and whereas Coinbase probably is all internal.
Yeah, they do. And you know, we're diving really deep into this, but I don't know if you guys studied the history of crypto, but that's really important because digital currencies could be stolen, right? And the FBI has gotten really good about tracing them because what the thieves, what everybody should realize is every cryptocurrency forever will be completely traceable. So if somebody stole coins and there was enough interest in it, the FBI would know who stole them and who currently has them. But having said that, the theft of cryptocurrencies could be done if somebody hacks into their company and hacks into the vault that's storing these coins, and that could be pretty damaging to a firm. Having said that, Coinbase, that's part of the knowledge advantage that they have is they've been doing that for years. They know the best ways of protecting all the coins. So that's part of it. That's part of it. So let's see how it evolves. This might end up being bigger and bigger and bigger. It might flatten out. We'll see. But a very healthy conversation there. Thank you. So I think we started talking about the industries that I think are going to perform well in the future. Let me get back to the sectors, right? And what I'm thinking about is, okay, great. Technology's done phenomenally. We've had, Meta and Google do well, even though they had bad weeks last week. All these things have been working. Okay. Now I want to add a few stocks, but I want them to be winners. I want to feel like, hey, I'm making a bet that's really going to work out in the next 2 years. And that's my train of thought. So hopefully you guys found it interesting. We dove deep. And before I conclude the session, any last calls or any last questions that you guys want to ask? All right. I'll take that as a no. We'll keep it at an hour this time around. It was a good session. Thanks again for the questions, and Kidder and Scott, appreciate it. We'll do it again next week. Just a quick community kind of update is we have a Discord server with multiple channels. Look on the community page if you want to be a part of that. There's been really good, healthy conversations there. Next Sunday, this Sunday coming up in 7 days, I'm going to co-host a live stream on my channel with Scott's Due Diligence. So tune in for that. I think it's going to be after all these earnings calls. So it should be a really good session. So I encourage you to attend if you can. And then keep the questions coming. Keep getting involved with the community, especially that Discord. I think it's a great way to interact with other members of the community, and you can really take a topic like we did today and kind of have different points of view and maybe get some information you hadn't thought of before. All right. So thanks again for tuning in. Everybody.
Thank you, Victor.
Thank you. Thank you, Victor.